Hey everyone, welcome back to Corporate Decoder, the place where we dig into financial reports to uncover the real story behind the numbers. Today we've got Thumzup Media Corporation and their latest quarterly report, and let me tell you there are some wild swings and interesting moves happening here. Before we dive in, if you like getting clear, no-nonsense breakdowns of these filings, hit that subscribe button, and if you want to chat about these reports with other finance enthusiasts, join our Discord community linked in the description below. Alright, so we're looking at Thumzup Media Corporation's report for the period ending the 30th of September 2025. First thing to notice is how they've barely made any money in terms of revenue, just a few $100s. But then look at their operating expenses. They shot up by over 2200% compared to last year. That is a huge jump, and it's pushing them way deeper into the red. Their revenues are incredibly small, just a few $100s. They say it's because they're focusing on getting more businesses on their platform before they really try to make them pay. Makes sense to build up a user base first, but it's a risky strategy when your expenses are so high. And speaking of expenses, they went from around $442,000 to over $10.5 million. That is a massive increase. A big part of that is their general and administrative costs, which exploded from about $268,000 to nearly $10 million. Marketing costs also went up a lot, almost $600,000 more. This massive increase in expenses means their operating loss dramatically widened. They lost over $10.5 million in just 3 months, compared to about $442,000 last year. That is a more than 20-fold increase in their losses. Now here is where it gets really interesting in the other income section. They had a gain from unrealized cryptocurrency assets, bringing in over $218,000. But they also had an impairment, meaning they lost value on these crypto assets, to the tune of over $337,000. So it's a mixed bag with their digital assets. They're playing in that crypto space, and it is causing big fluctuations. Even with those crypto ups and downs, the bottom line is a net loss attributable to common stockholders of $10.4 million for the quarter. That is up from about $464,000 last year. Looking at the 9-month period tells a similar story, but on an even bigger scale. Revenues are down slightly, which is not ideal, but the real story is the jump in operating expenses. Operating expenses jumped from about $1.3 million to almost $14 million. Again, general and administrative costs are the main driver, soaring from around $850,000 to nearly $12 million. Marketing also climbed significantly. This enormous increase in costs resulted in a much larger operating loss. For the 9 months, they lost almost $14 million. That's a huge jump from roughly $1.3 million lost last year. The net loss attributable to common stockholders is also way up, from about $1.3 million to nearly $13.8 million. This means for every dollar they've made or are trying to make, the spending is vastly outweighing it. On the bright side, their cash position looks much stronger. They ended the period with over $44 million in cash, compared to just about $110,000 at the same time last year. This huge cash infusion likely comes from recent stock sales. They raised over $51 million in financing activities, which is crucial given their massive expenses. Looking at the balance sheet, the amount of preferred stock Series A outstanding is pretty small, just $158 worth. What is interesting here is how they've had multiple rounds of preferred stock issuances, Series A, B, and C, each with different features and conversion terms. Series B was even retired. This shows a lot of complex financing maneuvers happening. Their common stock issued and outstanding also jumped significantly from about 9.4 million shares to over 16.5 million. This means they've been issuing a lot of new stock, likely to raise cash or to compensate employees and advisors. This massive increase in common stock directly reflects in their additional paid-in capital, which has ballooned from about $14.4 million to over $75 million. That is a clear sign of significant equity financing activity. However, despite all that new money, their accumulated deficit also grew substantially, from about $9.7 million to over $23 million. This just shows how much they are spending relative to their income. They've recorded significant intangible assets now, over $1.7 million for Doge and over $2.1 million for Bitcoin. This means they've actually purchased cryptocurrencies, which is a big part of their strategy now. They also made a large investment, a note purchase of $2.5 million to Dogehash Technologies Inc. This suggests a strategic partnership or acquisition in the works, which also ties into their crypto interests. The company is adopting new accounting standards for crypto assets, and this is going to significantly change how they report their digital currency holdings. Instead of just their cost, they'll now have to report the fair value and recognize gains and losses as they happen. This will make their financials even more volatile, kind of like the crypto market itself. They are also facing potential new taxes under something called the Corporate Alternative Minimum Tax. Here is something interesting in the subsequent events. It looks like some key individuals like Robert Haag, Isaac Dietrich, Joanna Massey, and Paul Dickman have rescinded a large number of shares that were issued to them. This could mean a few things, perhaps a renegotiation of compensation or a signal of some internal changes. And the big strategic move is their acquisition of Dogehash Technologies Inc. They have an agreement in place, but it's subject to closing conditions including stockholder approval. If this acquisition doesn't happen, it could really hurt their stock price and financial health. This is a major gamble for them. They also entered into a placement agency agreement for a significant offering, raising $50 million. This capital is intended for cryptocurrency and mining equipment, working capital, and general corporate purposes. This confirms their pivot into the crypto space. They paid a hefty 7% fee to the placement agent, plus other expenses, which is quite common in these types of deals. So what is my take on all of this? Well, Thumzup Media Corporation is definitely making some bold moves. They've got massive expenses and are losing a lot of money, but they've also secured a huge amount of cash through stock issuance. Their strategy seems to be a high-risk, high-reward play centered around the crypto market and an upcoming acquisition. The good, yes, they have the cash to keep operating and a clear strategy, even if it's a risky one. They are actively trying to grow and are making significant investments. The bad, their operating expenses are out of control compared to their revenue. The constant issuance of stock dilutes existing shareholders, and the volatility of their cryptocurrency holdings can make their financial reports look like a roller coaster. The accumulated deficit is growing fast, and if this acquisition falls through, they could be in serious trouble. They are heavily reliant on raising more capital. Overall, Thumzup is a company in transition, betting big on cryptocurrency and a strategic acquisition to turn things around. It's a very speculative play right now, and investors need to be prepared for a lot of ups and downs. Keep a very close eye on that Dogehash acquisition and their cryptocurrency holdings. Alright, that is our breakdown of Thumzup Media Corporation's latest filing. What do you think about their bold crypto and acquisition strategy? Are they making smart bets or playing with fire? Let me know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into corporate finance. And remember, our Discord community is always open for discussion, so check the link in the description. Thanks for watching, and well, see you in the next one.